Welcome, everybody, and thank you so much for joining us today for a virtual briefing on the Association for Enterprise Opportunities work to close the digital divide for America's entrepreneurs. First, you will hear from our President and CEO, Connie E. Evans, followed by a brief set of remarks from one of AEO's close friends and partners, Shivani Pampati of the Senate Committee on Small Business and Entrepreneurship, to learn about Chairman Ben Cardin and the full committee's work to connect entrepreneurs to technology resources. Then you will join my colleague, John Stanford, and me for a discussion on AEO's work to connect America's entrepreneurs to technology tools needed to thrive in today's economy. We hope that you will enjoy learning about our work today. With that, I have the pleasure of introducing AEO's fearless leader, Connie E. Evans, for opening remarks. Connie is a visionary leader, astute strategist, activist, and social entrepreneur who has founded 3 organizations. Throughout her career, Connie has also established herself as an international development consultant with more than 25 years of experience. She has been recognized and utilized by such groups as the World Bank, past administrations, and a host of local government, private, and independent sector organizations. Connie is a strong advocate of good governance in nonprofits, as she has nearly 20 years of service on philanthropic foundation boards and serves on a number of national and international boards. Connie's leadership has brought AEO to where it is today, and we are so happy to have her here to speak to us on the importance of tech equity for entrepreneurs. Connie, the floor is now yours.
Thank you, Alexis. Good afternoon, everyone, and welcome to the Association for Enterprise Opportunity briefing on a proposal to close the digital divide for America's entrepreneurs. My name is Connie Evans, President and CEO of AEO. Since 1991, AEO and its members and partner organizations have helped millions of entrepreneurs contribute to economic growth while supporting themselves, their families, and their communities. AEO's more than 2,700 members and partners include a broad range of organizations that provide capital and services to assist underserved entrepreneurs in starting, stabilizing, and expanding their businesses. Since the onset of COVID-19 pandemic, AEO's membership has expanded to include thousands of entrepreneurs and micro business owners across the country. Together, we are working to change the way capital and services flow to underserved entrepreneurs so that they can create jobs and opportunities for all. I'm so excited to be here today to open up this critical discussion on the need for smart regulatory reform to ensure that today's leading technology giants do their part to invest in and uplift and support entrepreneurs in their journey to success. During the onset of COVID, as state and local governments issue lockdowns, restrictions, and business closure mandates, we saw Main Street America come to terms with a critical decision point: quickly pivot to a digital business model or risk shutting their doors forever. COVID-19 did not create the digital divide, but instead it revealed long-standing inequities in digital and technological access that entrepreneurs, particularly those of color and situated in low and moderate income communities, continue to face today. While many successful entrepreneurs were able to pivot their operations online and adapt, many entrepreneurs were not equipped for the challenges that were yet to come. Entrepreneurs who lacked access to the internet, for example, could not build a website or manage online payments and shipping, causing a complete halt in their day-to-day operations, and more importantly, their cash flow. We know that advancements in technological innovation underpins the way small businesses conduct daily operations, how they reach their communities and tap into new markets. Whether that means taking payments online, managing shipping logistics, or mitigating supply chain and consumer demand, access to and knowledge around utilizing technology for business requires technical expertise and opportunity. This access and knowledge are a cornerstone of success for small businesses and entrepreneurs trying to start, grow, and sustain their businesses in today's economy. That is why AEO has led the charge on a new proposal to ensure that no entrepreneur is ever left behind in their ability to access, and integrate technology tools into their business model ever again. We hope that you enjoy today's presentation and that you will feel comfortable to ask us any questions that may come to mind about our proposal. We look forward to working with each and every one of you on this important work in the years to come, and we hope to remain partners in this endeavor for the benefit of all entrepreneurs. I will now turn the floor over to Shivani Pampati, the policy advisor to Chairman Ben Cardman of the Senate Small Business and Entrepreneurship Committee, a long-standing partner of AEO. Shivani, welcome. We are so thrilled to have you take part of this discussion today. We're also thankful to you and the chairman for your work to extend opportunity for America's micro business community. We look forward to our continued work together and send our best wishes to the senator. Can you tell us a little bit more about your work with the committee and how it intersects with the ever-present digital divide faced by entrepreneurs?
For having me. This is an important issue to the senator and something that he's definitely talked a lot about, especially in the last month. Small businesses are the growth engine of our economy. Senator Cardin always says that. And that's the main reason why he wanted to be chair of the Small Business Committee. Small businesses are going through a tough time right now, because of the variations in the global economy and global conditions, and the fact that we're still in a pandemic. We've seen the impact that the pandemic has had on small businesses, and Connie kind of alluded to that as well in her remarks. Right now, small businesses continue to face inflationary pressures, supply chain issues, and a host of other issues, including workforce. And we know how hard it is for small businesses to operate in normal times. And so these pressures only compound the challenges that they're facing. Another thing Senator Cardin likes to, highlight is that small businesses are job creators and are innovators, constantly figuring out new ways to deal with the current problems. And so that's one of the big reasons we have to make sure that there is a robust and healthy infrastructure for small businesses. During the pandemic, Congress built a foundation for addressing historical barriers and challenges for small businesses, predominantly minority small businesses, including by better tailoring the largest small business program, the Paycheck Protection Program, to reach minority businesses and the small businesses. And additionally, through the bipartisan infrastructure law, which codified the Minority Business Development Agency. We learned from that experience that when Congress creates intentional policies, they can break down historical barriers and address specific challenges. And this is something that we need to build on as well. These progresses are things that we need to build on. And the other thing we learned about during the pandemic is how innovative small businesses were. Across the board in different industries, every small business had to pivot from reliance on foot traffic to the internet and to using different platforms in order to reach their consumers and to continue operation and gain revenue. They had to find a way to connect with consumers who were not physically able to come to their stores. And that was from restaurants to retailers and across the board in different industries. This shift in reliance to the internet has led, to the adoption of technology at a much faster rate than what we were seeing before. There's already a trend towards moving online, and the pandemic only sped that up. But unfortunately, there's still a lot of folks who don't have access to those technology resources still. There's the first group of folks who don't have access to broadband services. According to two recent surveys by the National Federation of Independent Businesses, around 8% of small businesses lack sufficient access to broadband. Luckily, there's funding in the bipartisan infrastructure law to address, those gaps in broadband infrastructure. But the second problem is that once folks have broadband, there's still gaps in the subscription numbers. So the U.S. Census Bureau found that in 2018, that these numbers are worse for minority small business owners too. So only 83% of Black households had a broadband subscription, and only 86% of Hispanic households had a broadband subscription, compared to over 90% of white households in 2018. The economy we're in today, the economy of the future, will be centered around technology. So it's important that we ensure that this digital divide is bridged, and it's bridged equitably across, the urban-rural divide, but also across races. For those small businesses with broadband access, it's also important to ensure that they are able to understand the benefits of technology adoption. A recent survey by the Bipartisan Policy Center in Intuit found that 47% of micro businesses with 1 to 4 employees said that digital tools were not relevant to their business model. This indicates that there's an information gap of the benefits that technology can provide to a small business, as well as a lack of resources to understand which technology services are best for their businesses. With an abundance of technology resources available, these businesses will have to face the question of how do you utilize resources available, whether that's social media or payment processors or cloud services. That's why last month, Senator Cardin helped create the first TEDCO Tech Fair in Maryland, which brought 10 of the largest tech companies in the country with over 400 entrepreneurs to help share how do we use these technology services to grow our businesses. It had on-site trainings as well as one-to-one conversations for small businesses to bridge that information gap that they might currently face. This event is one of the many examples of how we can and should increase access to information on the technology available to small businesses. BPC found that in their report from September that businesses using a large number of digital tools actually significantly had an increase in revenue than those who use fewer digital tools. That's why it's great to see the Small Business Administration also holding this priority by partnering with larger technology companies to connect small businesses with digital tools and trainings to grow their digital network through the Small Business Digital Alliance. We on the committee are looking forward to see what comes out of that partnership and alliance. As Senator Cardin loves to say, and we definitely agree, is that we must tap into the entire creativity of America in order to compete globally. Across income levels and races, it's important that small businesses have access to tech resources and the knowledge to utilize existing technology in their business models to grow and to thrive. I'll leave you with, I think I can
actually unmute on my actual computer. And so I'll leave you with, the quote that is on the screen that I think really exemplifies how Senator Cardin feels about the ability for tech resources to help small businesses, which is that, we have the most creative workforce, the most creative people, and the most innovative small businesses. And in order to truly tap into their potential, we must provide them with the opportunities to succeed and thrive and grow. And only through that can we unleash the real opportunity of the real opportunity for growth of small businesses in America. So, again, apologies for the technical difficulties. Hopefully you were able to capture what I was saying on behalf of the senator and the committee and the work that we've done to kind of move in this direction. Just want to thank again Connie and AEO for having me speak about this important issue. It'll take all stakeholders, public and private, to kind of come together to address the issues at hand. And I'll turn it over to John and Alexis at AEO for a presentation on AEO's work in this space. So thank you all again for having me, and apologies one last time for the tech difficulties.
Well, thank you.
We really appreciate you being here today and are happy to capture your remarks in any way possible. I hope you have a great rest of your day, and thanks again to you and the Senator for your work in this space. John, I'll kick it over to you to share more about AEO's work.
Yeah, absolutely. Well, thank you again, Shivani, a longtime friend of AEO and certainly someone who's doing a lot of great work for the chairman on Capitol Hill, where a lot of this conversation needs to go. And we'll be talking today about a proposal that AEO is developing for policymakers to consider that we think can meaningfully address some of the conversation that we've had. And we find ourselves at a fascinating pivot moment where the tech-enabled small business did find a way through COVID. And we got 10, 20 years of growth in 2 years period when we saw nearly 90% of small businesses somehow take their business online. And this comes at the same time that as a country, we're looking at technology in a lot of different ways. And one of the ways we're also looking at these large iconic companies is in a new regulatory capacity. And so AEO challenged itself to say, how can we be marrying these two conversations to the benefit of small businesses? And that's what you'll hear about today. This is a initial proposal that we've been working on to flesh out. We are looking for offices across Capitol Hill that might have interest in the framework that we've laid out here today, because we think this can meaningfully move the tech policy conversation forward and do so, to Shivani's point and Connie's point, for those Americans that are so critical to our economy, entrepreneurs. On the screen, you'll see a few important statistics that just sort of show that if we can successfully address that digital divide, which too often hurts the most underserved, we really be enabling small business growth and sustainability and resiliency. There will certainly be more challenges in the decades to come, whether it looks like a pandemic, a natural disaster, or something that we can't foresee. We know that tech-enabled businesses have a better chance of being resilient. But we also know from Deloitte that most small businesses aren't taking full advantage of digital tools. AEO did research with website firm GoDaddy to find that so many do not have a website, and that most importantly in our world, entrepreneurial training and entrepreneurial assistance isn't providing service around technology. So we've got a lot of mismatched opportunity, and we believe we have a proposal here today that can address so many of these things at the same time and make a lasting impact. Jump to the next slide. When we started this work, we wanted to look at how can we better be sure that large industry is doing its part to support the small business community. And there's lots of ways to think about how to regulate large industry. In fact, it's been an important part of commerce policy going back 2 centuries. And there are a lot of models that can be looked at. Not to mention that in the current environment, there's a lot of discussion on Capitol Hill about addressing quote unquote big tech. And we've seen a large number of proposals run the gambit of how Congress and the administration can be addressing some of the unforeseen challenges, size, and scale that modern technology has brought into our everyday lives. AEO looked at several different ways of regulating large industry to the benefit of whether it be consumers, entrepreneurs, or others. And we landed that the Community Reinvestment Act, which so many in Congress will be familiar with, could be a framework with which to consider how we can talk about regulating technology companies to the benefit of, in this case, entrepreneurs. As many of you know, the Community Reinvestment Act was landmark legislation in the 1970s that was designed to address redlining, discrimination in housing lending, and it created a new way of addressing regulation for large entities, in this case, the banking community. Here we are 50 years later, and we're at a moment actually when the Community Reinvestment Act is being considered for modernization, something AEO has been working heavily on. And that's one of the reasons why we saw this framework with such an opportunity. In layman's terms, a way to think of the Community Reinvestment Act is a scorecard. And for banks to grow from mergers and acquisitions, or to open new branches, or for various other regulated activities, they need to demonstrate that they've been supporting their communities where they're located. And that's why you hear terms like the CRA scorecard or their rating, satisfactory or outstanding. The Community Reinvestment Act, which is overseen by 3 different agencies within the federal government, is a way of grading banks for their community investment. AEO is asking the question, why stop there? Why not look at this framework as a way to ensure that technology companies and their incredible growth are also balancing the needs of all Americans with a key insight on entrepreneurs? So we developed a framework that we submit to you today that could be a way of ensuring that those businesses are doing just that and making sure that they are pulling along entrepreneurs, particularly those from underserved communities. And tying into today's conversation about the digital divide, if we do this right and we encourage these companies to make the right investments and work alongside public and private partnerships, we will be addressing that digital divide and ensuring tech-enabled business growth for all. We can jump to the next slide. AEO's tech CRA proposal really boils down to measuring and holding accountable the commitments of the technology industry and large tech companies to supporting small businesses and entrepreneurs. So just like the Community Reinvestment Act, we propose a scorecard where we'll be measuring the financial commitment of these companies across a set of goals. In this case, AEO has provided 5 buckets, as we think of them, of places where these companies should get credit for the funding and resources they drive, because if we can get a reliable and consistent commitment from America's most iconic tech companies to addressing these areas, we will close that digital divide and we'll have meaningfully ensured that tech-enabled entrepreneurship is available to all. Our first bucket is connectivity. And whether it's broadband, fixed wireless, or a number of the other ways that we are making sure the infrastructure is ready for entrepreneurs wherever they are. Too often, we know that rural entrepreneurship is limited by their ability to get high-speed, quality internet. That investments in this area, which we want to commend, the billions and billions of dollars spent not just by the public sector, but by the private sector. One recent report pointed out the landmark investment in the Bipartisan Infrastructure Act of nearly $60 billion to support broadband deployment. But that doesn't tell the full story of the nearly $300 billion over the next decade we will expect from the private sector. And so we want to ensure that those dollars are recognized for the valuable effort they are in making sure that every entrepreneur is connected. Our second bucket is product accessibility and affordability. Simply put, are we ensuring that the best tools that enable entrepreneurship are available to all entrepreneurs? So whether that looks like a company giving away its product or making it available at a reduced price, companies will be getting credit for ensuring that everyone has access to that tools. Whether it's giving away free domains, whether it's giving away the tools of technology like laptops and phones and tablets, or whether it's a service that makes a meaningful difference in how we process business. All of these things being made available will be critically important. Our third bucket, quite honestly, I think is the most important because it's where such a gap is. Because it's not just enough to give away 200 laptops if we're not going to make sure that the entrepreneurs knows how to use them. All the data points we've talked about so far suggest that entrepreneurs, especially underserved entrepreneurs, aren't maximizing the utility of these products and services. So in addition to giving away or making available those products and services, we also want to make sure technical assistance, that guidance and entrepreneurial training is made available. And I think this is a bucket where if we really invest and we do more than just simply make our products available, but make available how to use them, we will see the scaling of businesses that technology promises. Our fourth bucket is the opportunity, is our funding opportunities. Think about this as access to capital to some extent, which is so core to AEO's work. whether businesses are offering grants, as we saw throughout COVID, whether they make lending capability, particularly in this rise of fintech lending, whether they use their supply chain to shepherd dollars to entrepreneurs, or whether they're funding research. All of those funding opportunities should be counted towards this scorecard. And then finally, it was after heavy discussion with a number of leading technologists who said, make sure this idea, this policy proposal isn't just a moment in time. Let's look to the future. Businesses that are investing in combating bias in AI should be able to count that too. Because if the AI that is going to be built into so much of the technology of the future has bias in it, we will eventually see that play out, especially across entrepreneurs that are already underserved. So how can we make sure that if technology begins to make lending decisions, procurement decisions, or payroll and hiring decisions, if AI plays this promised role in our life, we have to be investing now to combat that bias. And finally, also in that bucket, we consider efforts to make businesses more resilient, cybersecurity training, teaching businesses how they can use technology to make sure that even amidst risk and disaster, that their business will survive and thrive. Let's pivot now to talk about which businesses we think could be initially covered by this proposal. We'll be thinking about, and when we think about who should participate in this program, we want to be thinking about, similar to the Community Reinvestment Act, the size of entities. And we propose here that there should be 3 different tiers of entities that are brought into this conversation. The first size entity is our tier 1 companies, which we've defined as those companies with more than $50 billion in revenue. They will have the full requirements of this Tech Community Reinvestment Act, and will need to demonstrate a meaningful commitment to entrepreneurs in their community. For slightly smaller companies, those companies between $10 and $50 billion, they will have a slightly less strict scorecard and an opportunity to remediate any challenges. And again, companies will need to make sure the scores on these scorecards are good in order for their mergers and acquisitions, which is so fundamental to business growth, can go through. Finally, for companies between or under $10 billion, this is sort of a training wheels program, if you will, to get them familiar with filling out this scorecard, but will not have the punishments for non-compliance until they get above that $10 billion revenue threshold. So that's how we think about who would be covered entities for this Reinvestment Act. Technology companies of enormous scale will be asked to make sure that they're defining their commitment to entrepreneurship. And that's something that we know from many of our conversations with the tech community is happening anyway. We know that so many of these companies have prioritized that they support entrepreneurship and small businesses, but this will be an opportunity to codify that support. And it's something that us in the entrepreneurship community can come to rely on. We can jump to the next slide. To sum up our proposal, what we're really looking to do is look backwards at a proven policy framework, the Community Reinvestment Act, and apply it to technology companies that would have been unimaginable back when the Community Reinvestment Act was created. We'll be going across these 5 buckets to ensure that all the companies have an opportunity to demonstrate how they're closing the digital divide and ensuring that their tools, products, and services are being used as a level platform so that every entrepreneur can see the success and opportunity that is so buried within all of the technology that is available today. Because what we know, to go back full circle to our earlier conversation with Connie and Shivani, is that too many underserved entrepreneurs don't simply not have access to the tools of today, but don't have the training and assistance either. And that's why we think this proposal is unique and something that Congress really should consider moving forward. That said, we know that this is a big idea. AEO is about big ideas, and we look forward to working with Congress in a bipartisan way to see what elements of this proposal make the most sense And that's not to say that we have the answers to every question. A few places where AEO will be continuing to be doing data-driven and research-based inquiry is about how to cover all the nuances of technology and what is a definition of a covered entity. We'll also be thinking about, should this proposal move forward? We know that the Community Reinvestment Act has a 3-agency governing body between the FDIC, the OCC, and the Federal Reserve. We'll need to be thinking of comparable groups and whether or not that is the right format for the regulatory oversight needed to make sure this is successful. And then finally, how do we build in enough flexibility that in no way are we hampering innovation, but also making sure that this has meaningful impact? How are we making sure that this is data-based? And how are we making sure that the entire process is accountable? These are questions we'll be continuing to work on, and we welcome your questions here today. Alexis, I know we have a few already coming through in the chat that we can address while we're on the call, but we're also here. AEO has an open door policy to every office on Capitol Hill. So if you have questions about this, we do hope you'll engage and reach out.
Absolutely. Thank you, John, for sharing all of that information on AEO's recent work to help close the digital divide for America's entrepreneurs. We already have a couple of questions coming in the chat, so I'm going to go ahead and throw a couple of those your way now. The first question, which is a good one, is, are there any limitations to this proposal?
I think so, in the sense that AEO is the leading voice for micro business in the United States. At our very core, we are constantly advocating for the entrepreneur. And with that, that means that our lens is focused on the entrepreneur. And so I think not necessarily a criticism of this proposal, but an opportunity for further consideration is that this does not address the role of technology in consumers. And I'll leave it for powers that be beyond me to discuss whether or not consumer engagement as part of a technology CRA is an important facet. But I think that's another part of this ongoing tech in our live conversations that isn't fully addressed here, because at AEO, we are focused mainly on micro businesses and entrepreneurs, which of course have the faces of consumers and Americans behind them. But I think that is one of the limitations to this proposal, is we haven't fully wrapped around some of the consumer benefits that might be a fit for this proposal.
Thanks, John. Another question that we have in the chat is, how would this proposal impact underserved communities, especially given the redlining history of the CRA?
Well, I think that's what's so empowering about this proposal. Again, to go back to Connie and Shivani's points at the top, is the digital divide exists in underserved communities. Now, it's not for the same reasons that we had historic redlining. It is not for the same reasons and the discrimination we've seen in the past. But what we do know is that low-income individuals, minorities, women, all the data seems to suggest that they have had less of an opportunity to engage with some of these technology tools. And so I think by requiring these opportunities and these investments, we should expect to see a more level playing field. So often it's your zip code and your upbringing and your background that is a determinant of your future. Well, we certainly shouldn't let that be the case with the tools of technology for entrepreneurship. And so while it's not explicit that bridging this divide will benefit one specific population, we do know that it is a few specific populations that have been left behind, forgotten communities, as Connie used to call them. And I think those will be addressed most, because we also know for the technology companies, the efforts they've done so far really wanted to focus on those underserved communities. So we see this as a huge opportunity to reach into some of those communities and make sure we close that digital divide.
Thanks, John. That's a very helpful answer for our audience today. I have one last question, which I think is really critical to today's discussion. And who is a covered company? How would AEO define that? Why don't you take a stab at answering that?
Yeah, I think this is an important part of conversation with congressional offices. We certainly came up with the revenue standards, and we have some rationale behind those, and happy to discuss those in further detail. It's hard to say who is a tech company and who isn't these days. We've all become so immersed in this role of technology, and that's why that revenue standard seems so critically important. I think coming up with that definition is something we should all do collectively. I don't think AEO has all the answers. We've certainly worked with some existing definitions in our white paper around hardware and software and is technology instrumental to your revenues. And I think a definition can be crafted, but I think this conversation also opens the door to another way of thinking about how we ensure large iconic companies are engaging with their community and begin to heal some of this divide between where we work and where we live, because outside of Washington, we know those places are one and the same. And so I could see this proposal actually being used even more broadly than just technology companies to really think about how we ensure that America's most iconic companies are also their most iconic community stewards.
Well, thank you so much, John, for those insightful answers. I'm sure that helped clear up a lot of questions in the audience. But of course, if any of you on the line have questions, please feel free to contact me. My email is right on the screen. You can go ahead and take a screenshot of that. And we'll be also looking forward to circulating our broader report that AEO has done on this work later this fall, in addition to a letter of support from the entrepreneurial community on this idea to your offices, and then be on the lookout for a one-pager on this project as well, shortly coming soon to follow. So with that, I will go ahead and close us out today. Thank you all so much for joining. We appreciated you taking some time out of your day to hear about our work, and we look forward to our partnership with your offices soon.